I was going to say, how do your dogs do with the fireworks? Are they,
Oh, fucking fantastic.
do they
Harper
really?
and Toby do so good, dude. Harper, like, it's like nothing. Toby's like fine with it, but you could see that like he's a little unsure at times when he hears the big booms. But like I
Right.
held him and he laid on my lap during the entire fireworks show and he was
Outside?
fine. Yeah.
Damn.
Outside. Yeah. Harper, the bigger dog, she don't give a shit. Like it's like business as usual. She hears a big boom, she just like looks up, whatever. Doesn't matter.
Fucking nerds. They're shooting at us again. No,
Yeah, she just doesn't give a shit. She's the one that's always barking here. She didn't bark at any of the fireworks. It's really odd because I hear all these people that like have their dogs have anxiety by it. Well, but luckily my girlfriend, she started bringing her dogs out the minute she got them to like every fireworks show. Like just instantly started training them on it so they get used to it and it's no big deal. She's like, because she's like, listen, a lot of people drug their dogs up for it, and I understand why. She's like, but I don't have to because they've gotten used to it, so it's kind of nice.
Yeah. No, that's we have to drug ours up. That's the older one. She did better this year. She goes and hides, but we've got riffraff behind us who the cul-de-sac behind where my house is. That's where there's a big family. They get together. They have big parties, quinceañeras and whatnot. But for 4th, they get a ton of fireworks, and they stopped at like 2 a.m. And then at 3, I swear to God, they went and had like a fucking tequila break and then came back at 3, just like right back at it. And it's like one every like 3 minutes. So even for us, it's like, damn, people, unlimited ammo back there, just shooting it off.
All right, what's going on, everyone, and welcome to another episode of the Market Misfits podcast. I'm your host, Joe Pokeshiva, joined again by my partner in crime, Smiddy, Fed Rate Unch, which has been perfect lately. Fed Rate has definitely been Unch. How you doing?
Good, man. How you guys been?
Good. It's been a while. I mean, it's probably been a month since we did the last episode, which was not by design. Smitty was on vacation, a well-earned vacation, and then we had the 4th of July week last week where it's just kind of a clusterfuck with everybody. So I was like, let's just push it. We'll do another one and try to get back on the regular cadence. Funny enough, when we are supposed to do the next one after this is when I'll be gone. So we're going to have to figure that out. But yeah, I mean, the thing is, in the grand scheme of things from when we talked last, that was what? About probably a month ago. Where were we on SPX, right? Probably not. There's just been constant melt up since, right? Mm-hmm. I mean, I think we maybe had one 100-point pullback in that entire time. It's just been a complete melt up, right? Yeah. Let's see. We were probably sitting around 5,900-ish.
Yeah. I think
now we were sitting at 62.30 with a peak of 62.84. So, just been straight up melt up scenario. I mean, even more so last week with the light volume during the July 4th week. Just a complete vol collapse basically, and it's been a completely different market. I'm curious though, now that you're back in the saddle from your vacation, and even previous to this, since we did the last episode, like what have you been trading? Any recaps of or any trades that you've been taking down?
Nothing crazy, honestly. I've been scalping NASDAQ, which has been nice. We still have, there's plenty of range in those. We're kind of working on that in tandem with Ranchero, but for the most part, man, still holding some of my core positions over here. The Moderna, the United Health, playing around a bit in gold. I think gold looks pretty good. So caught a nice big chunk of that move earlier. What was that, last week? And booked it. And now I'm back in the trade. I'm looking for highs on that. I know there's a lot of opinions about the precious metal side, but I think that we test highs again, and I think we're going higher this year. I don't think people are done buying that. I need to double check positioning. I have not caught up on the gold positioning yet. I think Jay posted hedge funds were kind of a little bit like flat to maybe a little underweight gold. So let's see if this is gold. No, that's SPX. I'll find it and we'll talk about it. But yeah, so that's kind of my take. Added Oscar Health, that's gotten real popular. You're seeing a lot of that on Twitter. So added 75,000 shares of that, and I'm going to sell calls against it. And I think that's going to be another long term. We're pretty booked up on healthcare over here. So kind of a weird spot to be in. I hate to be this concentrated, especially when you've got some other little movers and interesting things going on. I've kind of stoked up a lot of my margin on this side, so keeping it pretty tight though. It's weird to take a week off. That was the first vacation I've actually checked out and didn't really,
Yeah.
I talked to you a little bit here and there, but dude, I would just leave my phone on the beach and go swim out and snorkel for a few hours. So first time I've done that kind of shit in like since I started trading. I think 2018 would be the last time I checked out this way. So it's nice. If I still feel like I'm kind of like with last week being short and kind of mediocre, I feel like I'm still getting back into the saddle of like serious business. But yeah, man, it's good to be back. Nice to see all your faces in the room.
Yeah, it's I mean, in the last month, I'll be honest, I traded a shit ton. Yeah, there was an ass ton of trades that I did, and again, a lot of it scalping futures we've done. The newer trade that we've been doing a lot more based off of what I'm seeing on dealer positioning and Gamma is playing a lot of flies, right? A lot of flies, low risk, high reward that have been money in this low vol environment. As Gamma kind of acted a little bit more as a magnet to these different levels, which has been fire. But then across the board, just a whole other set of trades. And I was trying to like go through all of them, like ARM. Like here, I'll show my screen for those that are watching on YouTube, but for those that are not, you can always pull these up on your own. But like, ARM, we caught this this ride up from here all the way. Right. And then I rolled it twice. So I'm on another roll that looks like it'll probably end up expiring worthless with this pullback. So we had that trade. I caught a nice, a meta scalp. What day was that? 16th. So I caught that up in here when it hit 700 and it kind of faded down, which was fine. But that was just a scalp. That wasn't anything really impressive. I caught part of this AMD run up, up to here. And then it rolled, so that one's probably going to expire worthless with this pullback again in semis. That was a nice one. What else did we do? I got screwed in the Boeing off the news that they had the one day when with all that. It sucks to say you're playing off of the headline where you had a plane malfunction, but that's just the market in which we in. Yeah, so Boeing was interesting. Didn't do a whole lot there. I finally closed out my Carvana puts, lost on those, which is fine. It is what it is.
What's that piece of shit up to? New highs?
Look at this piece of crap. This thing sucks. Fucking look at. I got all my like lines here of when I break this is when I'm gonna start taking profit. Yeah, nope, didn't fucking happen. I was short puts around here, never took profit, and it ripped in the other way, and I closed it for a loser. I didn't stick around anymore, which is fine. And then the best trade that a lot of people had in the room was the circle. So the circle's been hot. Lucci was short. I caught a short. I was in the 232 and a halves, which was definitely the wrong ones to play because there was the half strikes. So I should have just played the 35s. But yeah, those were money, dude. They went from $19 to $31 and even more so. Right. And Lucci was mega short all that. I wasn't playing with like that much size. We're talking about a couple contracts because of, how the movement was in that, but I wanted a piece of it. And then I'm still sitting in a bunch of VIX call spreads for this vol up spot up shit. I played some Uber today and
nice.
That's it. But we did a shit ton of trading. Like just even Ron too, Ron, me and him, you've seen this. We've been scalping a shit ton of SPX and NQ. He's been playing the Qs and the SPY puts. I mean, we had some killer setups, not even just like scalping ops, but like longer hold opportunities, just purely playing off 0 day, like dealer positioning and understanding the hedging environment that we were in, which has really been money, I think, for a lot of people in the room that have been like tailing or paying attention to it, and something that we're going to be doing a lot more of. But overall, it was fun. You were gone for a whole week, and if I did the same thing. It feels like you missed a shit ton, but it's always nice to disconnect. That's what I'll be doing when I go on my golf trip here. Is I'm gonna disconnect too, man. That's why I was doing so much trading. Now I'm like, we're gonna keep doing this until I got to take that 1 week break and come back with a clearer head. But a lot of A lot of shit went down over the last month, that's for sure.
Yeah, it's I mean, it's pretty interesting too, looking at just where we're at. 2 months ago it was almost the end of the world with the tariff news and whatnot. Now it's like, hey, we get the announcement today of the letters being sent and all that, and it shook the market up pretty good. But again, great scalping, situation, right? That's what I'm seeing is which is fun. I'm playing it pretty small, and I'm doing a lot of this in my personal account because it's a little harder for me to get meaningful size on the bigger account. On these big drops and everything. I noticed I get pretty mediocre fills over here on Thinkorswim. Anytime you buy more than 10, 20 contracts, it seems like you're getting a 5-point slip, which on 10 contracts cost you pretty quick. So yeah, just doing this in my PA, having a lot of fun. It's really fun back testing the scalper tool that you built. If I could get the marbles out of my mouth, but no, I've been playing off that. So caught a few of those today. Had 2 that hit and 1 that didn't. I got stopped out. So, but again, I got a little bit lucky at that 12:30 Central time. I was right in front of that. I was long from 870 and just caught that nice 60-point candle on the NASDAQ. So, got out of that. And that kind of made my day there. I pretty much hung it up after that. There was no need to overtrade that account. So yeah, man, it's been nice, fun to be back. Tesla shook me out today after I joked with Lucci last week about, I won't short that company. And as you're playing Uber, right, catching the other side.
Yeah, the opposite trade. Yeah, that's the play, at least for now. But they could easily fake the shit out. I mean, here, if I go back, you look at Tesla. Tesla's trading what, 294 right now on the post.
Yeah,
I mean, this is gnarly. I mean, and day trader Dave Portnoy, shout out Dave Portnoy. He's long $10 million worth of shares on Tesla, expecting like a 10% retrace. And people are laughing at it, making a joke, and I'm sitting there. I'm like, would I trust that guy in anything he does trading? Absolutely not. But we've seen way crazier things than a 10% jump in Tesla or a 10% dump in Tesla. Like it's kind of nothing for Tesla in the grand scheme of things, especially lately. Look at these fucking daily candles. This is ridiculous.
Right. And that's, that was my logic today of we get this big sell-off really on not a whole lot of news. Most days they come out with mediocre news. Their sales are down, yada, 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 and the stock rips. And I think a lot of it's the politically motivated sell-off, which is a different way to be trading, right? Having to be akin to what's going on with, the president and Musk himself. So that's kind of tough, but it was really a day trade for me. And I left for a couple hours, had to run errands. I come back, and after I stopped myself out, I told all you guys, like, hey, I'm going to go ahead and take the loss here. I had a couple shots at getting out break even. I come back and I would have been up, another buck and change. So you got to kind of laugh at those moments. And in hindsight, I probably could have snagged better entries on that.
Sure.
But, it is what it is. You got to take the wins and the losses. So
where are you at with UNH? That's been your biggest position. Where's the update there?
That's the killer, man. I mean, it's back to 303.60. So, we were talking about this, what was that, last week when it was up at 326 or so. Should have booked the gains. I should have probably just took up on that high. What was that, Wednesday or Thursday? I should have just took the gains and been on my merry way because it's just respecting the range. So, it looks constructive. We'll see what happens here. I've got a VWAP coming up, I think at 297 or so. So it wouldn't be super surprising to see it go down there, which again is a little bit painful. My August calls, the 300 strikes are starting to look, a little bit grim. They're down about 30%, which again, last week there was, profit to take. Unfortunately, the sell-off, it was in the post that I looked at it and said, yeah, it's probably time to get out. Probably should have booked the shares and moved on. It is what it is. Learning experience. Hate to see that.
Well, the client too, though, didn't want you to get out, right?
No, not really. He was kind of.
So what can you really do?
Yeah, it's also tough, man. Most of you folks who manage money will know this, but they don't. Guys like this don't tend to care about market hours. So he called in the post and was like, I called all day. It was like, hey, man, maybe time to go ahead and take our, $1 million and be on our way to a different trade. And he calls me in the post and is like, yeah, maybe, and you go to try to sell 50,000 shares of United Health in the post, and there's just not a market to sell it to. You get into that old situation of you're trying to just blow out of your book, and there's no buyers. So then you end up running the price down on yourself. We've been through this a handful of times. And it's a little bit tough, man. It's tough because in hindsight, of course, I would have loved to have taken the money, but we'll be hanging around. We might just be the, United Health year-long holders of this thing and see what happens.
Well, he's looking for either the top up here, right? So he's either looking for this, right? This move up to that, or originally though, he was looking for the move to go from here, like all the way up, right? All the way up to here to this line.
He wants gap fill regardless. And then, we could get into some of the fundamental shenanigans on this name and sit there and be like, oh, the PE ratio, they're actually making a bunch of money, yada, yada, yada. I don't think the big, beautiful bill doesn't seem like it's really going to help UNH. I'll have to go see how much Medicare, Medicaid cuts are in there and what their revenues are on that note. But, looking at something like United Health, it's a good company underlying. Like, people are sick. We're getting sicker. We all eat like shit. So it's not like this company's going away anytime soon. They're one of the biggest, if not the biggest in the industry. So kind of tough. A little disappointed, but we'll keep on rolling, man. I'll just sell calls against it, scrape some premium, hold it for another day. We'll get back up there at some.
I am praying for you and your P&L for the year. I think everybody is, especially because you flipped back to green after that original gap, and then again the guy flip flopped, and it is what it is. It's a tough situation, but I'm hoping you got some good support here at 300. So hoping you guys stay above and get what you guys need. I mean, at least your entry isn't horrible. It's just you don't know. There's no timetable in which this thing's going to move in whatever direction. Everyone was thinking this was going to be like CrowdStrike after they had their big thing, right? They dumped lower. It was brutal, right? Stock got cut in half, and then they just ripped now to new highs. So, it is what it is. But
the irony is that when the CrowdStrike blowup happened, that was a big conversation of whether or not we should buy that, and we decided to hold off. And now look at that thing trading, pretty much fresh highs as of yesterday at $500.
Yeah, it's disgusting. I mean, this is what we're talking about for those that are watching. For those that are not, you can pull up a chart and you want to go back to July of 24. I mean, look at this is nuts.
Mm-hmm.
But this is what people expected for UNH. They expected this and then this.
Run back up, yeah. So positive note, it's consolidating. I think that's healthy. I think anyone who was massively short has now been given the opportunity to get out of the way. I don't think that you're going to have news that comes out that really kills this thing again. That said, you could have 10, 15 point days like it's nothing. And that's what we saw, last week where it really kind of moved. And then, what was it? What is that company? CNC, I think, is that Cinet? How do you pronounce that name? Centene Corporation. They pulled guidance, right? Same industry, and just completely tanked it. So saw a couple people in the room talking about this name, and same idea. I have the same idea. If I add more healthcare, you guys need to check me into an institution. So that's going to be I'm going to keep you guys all on tabs for that one. But yeah, I think the same thing. I think fundamentally it's a good company, good earnings. Could they slow down? For sure. But at the end of the day, they make a boatload of money, and it's healthcare. We all need it. Right. We all get sick. We all die. You're not getting away from that cycle. So unless the population severely dwindles and people get much, much healthier, which I highly doubt, it's not the way it's gone historically, then yeah, I think that these companies all will revert. It's a timing thing, right? And do you want to buy 1,000 shares and just say, you know what, I'm going to sit on this for the next year, 2, 5, 10 and be happy? Or are you doing similar to myself where you're buying a much bigger position, concentrated, and really needing that move to happen, in a shorter time span? So could we theoretically hold United Health for as long as we need? For sure. But again, I would like to, you'd like to free up capital for
Sure.
some better plays. I mean, I would rather be in the tech space trying to catch growth names, or even some of these smaller. I mean, look at Circle, right? That would have been nice to have some liquidity there for that.
Sure.
So that's what I'm looking at over here. But biding my time, just keeping an eye, and still have my chip in my chair. What can I say?
Right. Absolutely. Totally get it. Let's switch gears here and talk a little bit about, my favorite part is, when we get the notes from McElligott or we get the notes from Gem and, kind of dissecting what they're saying, because, they focus on a lot of stuff that I like and like you like, and where we can go from here. And people always love talking where we can go from here. And we said on the last episode that we did, right, where Gem was saying 35% drop peak to trough, which is what we put out, probably 4 or 5 months ago when we did an episode, and it hasn't happened yet. But his whole thing and his timeline that people always failed to understand was, the summer of George, which is what we're in now and technically playing out. And then, as we get towards, fall, winter, start to get it. And then 2026 is really when it comes down. Now, will we get that now? I don't know. But to McElligott's note, which was the one, he actually had two. He had like an addendum that he put on to his note from the one day, which is odd. Usually he only posts like a handful of times. He'd like put an addendum out like right after the next one because of, he saw some crazy ass shit. But basically, the initial note suggested with where we're at there, and we've realized volatility's at, that you should, with an 85% hit rate over the next month. Now, this is back again, June 24th, when this note came out. There's like an 85% hit rate on buying VIX call spreads, basically vol up, spot up, which we've gotten. However, after that note came out, if you would have played the trade like I did, you're just getting back to flat right now, because then, they put a floor, like a hypothetical floor in at 17, and we got below that, right? I think the low that we hit on VIX was like 16.12, so more of the theoretical force. So that kills it. For anybody that's ever played VIX, one whole strike point is a big deal when it comes to the value of your call spread. And I'm playing out to, to August. But he also said the same thing too, where some people were going out and selling puts to buy call spreads and playing that whole thing. And selling, puts has kind of become the new bond trade, was another note he said. So anyways, the most interesting part was when he ripped the addendum. So he goes and says call spreads could be a good trade. There's an 85% hit rate on his back test based off of this data. Then he comes out the next day and goes, well, there's another thing with 100% hit rate. And that is when vol control funds they have to go out and buy now, because of that skewed number that came out from the 3-month look back period.
It's out of the data set now, correct?
Exactly. It's out of the data set from the whole tariff dump. And they're projecting $114 billion over the next month in buying, driven by collapsed realized volatility and that April rollback window kind of going back. So the market, in theory, is being force-fed mechanical buying again, which might have helped with this rally that we've basically fueled up since that note came up. And now we're starting. Today was the first down day in theory that we really had. So that was interesting. And the note basically says that your 1 month forward returns on this back test that they did when you get to this vol control fund buying, which is the highest it's ever been. Like since they started testing this is the highest number since they've been testing this, since 2006. It was like a 20-year back test. This is the next highest number was 93 billion in 2017. So it's been a while. But the 1 month forward returns with 100% hit rate was 2.5% was the median up. In the 2 month window, it was 4.5% was your median, return. But the excess returns were 40% or 38%. So he's basically telling everybody, like, get the fuck long, which was odd because the previous said during the back test said, 85% rate of VIX call spreads. But that was the vol up, spot up environment that he was kind of talking about. He was a little bit off on the timing. But again, that's why nothing's perfect. That's the trading game. I was willing to take the risk. It's why I bought a ton of time with mine. But it was really interesting to see it. So it gave me even more confidence on a lot of these plays that we were doing with the dealer gamma in positioning where we have these magnets. I'm like, all right, well, I could play a fly here, and we technically have mechanical buying underneath the hood. Should just grind us up slowly, right? And sure enough, that was my thesis. That's exactly what happened. Right? It completely happened.
And dude, let me ask this. Do you know during a session when these vol control funds, like, are they market on open, market on close type buyers, or are they coming in and systematically buying throughout the day on, like TWAP programs, or how did they actually fill their books? I'm kind of curious. I don't know. And
it's a great question. I don't know either. Like, that'd be a question I'd have to ask Jay, and I don't even know if Jay knows. I actually don't know how they do it. My assumption is they're mechanical buyers throughout the day, whatever that is. Like you said, TWAP, VWAP, whatever it is. I have no idea. My thesis is based off of that, obviously, like that they buy throughout the day. That's the mechanical buying grinding up. Mostly because too, like when you look at these mock numbers that we get, and again, I know it's adding and subtracting from everybody that puts their mock orders in. But we haven't really we're not seeing like $7-10 billion to the buy side. The most I think we saw was 4, with the vast majority either being, 1, 500 million or 2-3. So it's an educated guess. I don't know. But it just want to make sense from the buy it all at the end of the day and all of that. You know what I'm saying? And make more sense, especially at that size, to systematically be doing it mechanically throughout the time. But I also don't want to be quoted on that and be wrong, because I actually don't know. But yeah.
You know what? I think I know someone I can reach out to. I'll see if I can get this guy to respond to a DM, or I might have you do it through the STEAMROOM page, just for a bit of educational. I think it's Andreas Steno Larson, and I believe that.
Yeah, let me know if he says anything.
Yeah. I think they just actually got a buyout offer from Real Vision, of all people, which is pretty cool. So always, people I've listened to for years. They're systematic guys. Learned a ton from them. It's probably been 6 or 7 years I've listened to their podcast, and saw that the other day that they were getting bought out, so they can focus more on research and less on the management side, or more on management, less on research, I should say, so they can laser focus. But pretty cool. It's pretty cool. So I'll ask him and see if I can get an answer. If not, we'll use the STEAMROOM page and see if that'll help.
Would be, for sure.
Honestly, really fun to have one of those guys hop on the podcast and talk more about it in depth, just so we could all learn together from some of the pros in the industry.
Absolutely. Would love that. So now they have what else adding into this note, which is interesting, because everybody again is kind of in a similar consensus between Gem and McElligott and all of them, is you have this melt up, which is mechanical, right? People missed majority of this rally, so they're chasing, and now they're going to chase at all-time highs, which is usually the first step to, what they call like a pressure cooker, right? So now you have like this pressure cooker. Is the easiest way that I could kind of explain it. If what he's saying is get a pressure cooker, right? And everyone now is piling in. Then you're getting at all-time highs, and this pressure cooker is building. And we don't know how high it can go, right? There's a threshold, obviously, but we don't know how high it can go. But eventually, what they're saying is it's going to explode. And what happens when that happens is the move is usually, again, staircase up, elevator down type of environment. So they're saying higher first. McElligott's saying this, I should say, and then lower. And this is all kind of it's trappy. Now, all of this can always change, right? You get one pullback or something like that, and this whole entire thesis change. Most of them have been calling this type of play for a while. It's just, I think, been a lot. I don't think many people thought we'd get all-time highs, despite, them changing their tune. You and I talk a lot about the macro end of this, which I don't think is very great. And I also don't think the markets have given a shit. We're in like a cycle where all news is good news. The jobs numbers bad. Okay, we got to cut. Job numbers good. Okay, economy's booming. Like it doesn't matter. Nobody gives a shit, which is problematic. That's very problematic.
Right.
But I'm curious. Like now you see that, and you have these. You got buybacks, right? Which is what we talked about. You got realized volatility down. Everyone's piling and chasing highs. This, now you're going to have dealers short gamma either to the end of the upside and potentially onto the downside at some point here too. We could get some crazy explosive moves in the near future.
Right. Well, predicate that with any headline could trump this market. And I think that's the other side of it, is that we have structure underneath. We have some shaky macro, in my opinion. And then we've got a president who's willing to just tweet out, threats against another country and or sling bombs, that's the one factor I don't think that we can all keep in mind. I mean, a peace deal in Russia, Ukraine, or a peace deal on the Gaza Strip, right? Those types of things can be big catalysts to the upside as well, which again would support this thesis of how high do we go? I mean, beginning the year, wasn't the Goldman target 65 or 6,600 on SPX?
Yeah, they're already. I thought they revised it lower. They're probably going to revise it higher. I think Goldman's revised their SPX target about 12 times already this year.
Right. So again, even those guys were kind of shooting for the moon and stars. We got the tariff news headline, whatever, that pulled the market back, and then it's like, all right, we lower the target because I think you're right. I believe they retracted to 63. We're almost at 63. So now what do you do as as that analyst, you got to come out and say like, well, I don't see why we can't go another 300 points up. It's only 5%. We could probably do that in a couple of weeks if we wanted to. So it's tough, man. I mean, it's a tough market. And this was the move down, I think no one was ready for it. And I think the only people who were foolish enough to buy it was retail. And I think retail's doing a good job this year.
And it worked.
So good on them, good on the retail side, which is great, And I think that's a side of it. Who gets trapped? Do the professionals get trapped? I mean, retail is just going to keep buying. I think at this point, and I'm sure you see it in daily life, most of us see it, right? Anyone who trades and does this seriously, whether it be for a living or, extra income, we have these people who come to us in life and are texting us, asking us, oh, do I buy this? Should I buy this? And they just do it. They just throw their money at it and think, I'll just hold it for 5-10 years. I get that text a lot from someone who I'm close to. And this lady, she has nailed it. She's making a fortune over here. She'll send me pics that she has with her entries. And I see, I know what she's got in her brokerage. Absolutely crushing it this year. If we all traded like she did and ran a company the size that she did, we would all be celebrating on a beach somewhere, probably with Sang Lucci for his birthday, So, so that's the other and other, viewpoint of this market is like that type of buying, the retail mechanical buying. We don't think of that. We don't consider that, right? You see it a little bit, people tapping 401ks here and there. But there is this perpetual Ponzi bid of, and I call it a Ponzi because that's part of, markets just go higher, right? Historically, that's all they've ever done. I think if you zoom way out, right? Go look at your S&P chart, zoom way the fuck out. It's the weird parabolic move in those markets that, it used to be a 300-point move in a year was like, that was the biggest year we've ever seen. And now we get a 300-point move in a handful of days, and we're like, this is a nice trading range. So I think that the longer you're here, the more you have to adapt to that, and that's kind of difficult. As we're all aging, right, going through this, I think that's difficult because I have those days where I'm like, it's all going to shit. We should probably pull back. But we joked in the room today that bears often are, they're wrong, or they nail the black swan and then they think they're a genius. But in reality, how long do they have to tout the bear case until it finally works? It's how would Lucci put it? Every once in a while, the sun shines on a dog's ass. Like, and dude, and we all love to short, man. Like you love to short. I love to short. Lucci loves to short, but it's that to me is difficult because sometimes I can't turn it off, and we've both been in crypto for a long time. It's the same thing with Bitcoin. You look at Bitcoin these days and you're like, how is this going to go higher? Who's the next marginal ding dong who's coming in and saying, wow, this Bitcoin thing's a real good deal at $108,000. Like I stopped buying at 3,000. I thought 3K was too much. And I was like, nope, no more. And like, that was a silly decision at that time. But in 2017, 18, like, you couldn't believe that it went to 20, right? And then now 5 years post, 6 years post, we're like, oh yeah, it's 100. Yeah, we could have hit 150 in a few months. It's just, I think that it's crazy times. The bigger side, and of course I'll bore you with my macro spiel. You guys love this shit, especially Ranchero. are we seeing appreciation in the assets, or are we seeing devaluation of dollars? And your buying power doesn't go as far. That's part of the puzzle that you know, you realize it when you go to pay the bill or pay your tab at the restaurant, but I don't think you realize it when it comes to buying stocks. Because what would the, you know, dollar adjusted price of Apple be from 1995 to 2025? That would be an interesting measure to look at. And we don't feel it. You just don't feel that. And that's what's interesting, is that as we come in, you take your paycheck, you put it in the 401k, Vanguard goes and buys the whatever's in the ETF wrapper that we all play into, the 20, 35, 45, 55, whatever your retirement window is. We don't even feel that. The markets feel it, right? There is that perpetual bid, and we are all contributing on a, weekly, monthly basis. So that's something to think about. It's something, it's small, but it's there.
Yeah, it actually brings up a really good point to something else I wanted to bring up that was in the McElligott note. And I mentioned it before in a previous podcast. And what I want to do more of with all this is, like, because sometimes these notes that come out have so much information and it's really, really good. I want to, like, sometimes take it back and actually explain to people what they're saying and what it means. Because maybe it'll, like, to your point, it can educate them a little bit on this. And what you're talking about with the retail and the perpetual bid plays into these levered ETFs, right? So these levered ETFs are really popular, especially with the retail crowd. And inside the McElligott note was a really good data point that I don't think anybody really talks about, which is why I love him so much, because it's just not sexy, but it's really important. Like, it's super important. So I want to show you this too. So here's a screenshot. And for those that are not on YouTube, this is just levered ETFs, assets under management, and the percentiles they're at. It's basically the growth. So if you look at this, it's basically at all-time highs. It's just ripped higher, right, for total assets under management. Now, the way levered ETFs work is they have to rebalance daily, right? So they're always rebalancing themselves across the board. So McElligott says it's basically synthetic negative gamma. And for those that don't know what negative gamma is, it's just basically, easiest way to put it is, from a dealer's perspective at least, is when the market goes down, they're selling, adding fuel to the fire. When the market goes up, they're buying, adding fuel to the rally. Same thing happens in these levered ETFs. They have to maintain the correct exposure, right? The market's up, they buy more. Market's down, they sell into weakness. And right now, the AUMs, assets under management, are at record highs at the 99.5 percentile for how much that they have. So this is, again, back to what we talked about basically for 3 months ad nauseum, this mechanical bid in the markets. This is also a part of that. First, we had CTAs. Then we had vol control funds that we just talked about today. We also have had this levered ETF thing. But what this does is it creates air pockets, right? Air pockets in the market, which is what he's saying, what everyone's been saying, where, yes, we have this bid, but once the bid gives up, you have all of this, like this synthetic and negative gamma. You have the short gamma on the downside that I think dealers are now positioned with as well, where the unwind could just be violent, right? And I don't think anybody's really, people are hedged. I still think that, people are still haven't gotten this right tail, move. I think people are still chasing it from what we've seen so far, obviously. But at some point, with all of this going in, this air pocket should rip us fast down to the downside in some capacity, is what everyone's suggesting. That's what Jem's suggesting. His has got a macro thesis to it, right? McElligott's suggesting it too. When that happens, he doesn't know. But based off of all the flow that we have, at some point, it's like we're on this perfect, little, carousel going around. And once the music stops, there's the potential for a pretty violent unwind with all these different things going there. They're basically like, it's like a hidden vol bomb that no one really knows is sitting there because no one pays attention to this shit. But they're moving around, from what I could gather from his note. They have to rebalance per 1% move, $6 billion. It's a lot. That's a lot when the total assets under management for each of these is, if you look at what the one on the left, like, total assets under management, it's at 120 billion, right? So that's significant. Like, that's a very significant amount that has to move around on a daily basis. So that's just something I wanted to kind of point out and kind of explain to people, in the way that I understand it, of course. And the retail has really funded a lot of this, to your point. I mean, they're big on these levered ETFs. I mean, shit, we have people in the room that play this shit religiously. So that's just another piece to the puzzle.
Well, and what's interesting to add to that is looking at that chart, that pullback you see towards towards where we're at in that 99.5 percentile. That pullback is the pullback that we saw from February to April.
Right.
Right. That is, and you can see it right here on the chart. And then go pull up, I'm looking right now on SPX. That was about a 20% move from February highs to the April low, 47 days or so, 20%. So think about that day on day on day. We had some up days sprinkled in there. Don't get me wrong. But then there were also the handful of days where we were down, this day was down 5%. The next day, 6%. Those are the days. And that's where you see the trough in these charts. They're unloading stock at an unprecedented pace. Of course, we did get the V bounce eventually. And, anyone who is buying the blood, congratulations to you. But it is tough, man. We're getting to a weird point in markets where there's a lot of mechanics behind it that aren't just auction market theory, right? You and I love auction market theory.
Yeah.
Some of this doesn't, it breaks the rules of those logics, I guess. That school of logic gets a little broken when we have this kind of situation. So little tough environment for me to adapt to in a way. And I look at highs like this and my initial thought is, hey, probably time to buy protection or to just be outright short. So today I did think we got a nice pop in VIX, but is it still, is there still time to go buy some puts and actually sit here and say, yeah, we come off these more than, 20, 30 points. We got another 200-300 points down before we continue back up. Tough to say. I wish I had the answer. I wish my magic ball was working.
Well, this is kind of what's key across the board. So I'll get rid of this. But one thing to kind of take into account of how these unwinds usually play out, especially in this situation where there's so much fuel that's sitting there, right? Is, what they're saying, what everyone's kind of saying is, and this is different because he said he's going to push his tariff deadline to August 1st now. So initially the first tariff deadline is coming up, right? It's the 9th, I believe it is, or the 8th. So this would be we're recording this July 7th. So that'd be tomorrow. Or the 9th, but their executive order is allegedly going to push it to August 1st. And we had some news today about the potential Trump tariffs, which is why we kind of moved lower off of a lot of that news today. And we went down, 1%, give or take. But something to kind of understand with all of these different pieces that we're kind of talking about is on top of that is volatility sellers, right? So vol's been crushed, right? So you have vol sellers basically everywhere. The overriders, premium income ETFs, skew is really steep. Everybody's hedging, the right tail, but they're not really hedging to the downside yet. And realize vol is absolutely fucking clobbered right now, which is why you have these vol, control funds buying, and it's still kind of ramping up. So the risk is if there's a shock event, right, which is what we're looking for this whole thing to unwind anyway, some type of shock event, whether it's tariffs, some type of reaction to us kind of going lower, whatever it is. That's where you could get this, crazy spot. I mean, think about it. The VIX was 18 today, and we're at usually. Yeah. What was the last time we had all time? What was the VIX at?
Oh man. Well, I think that's a relative measure, isn't it? Because you look back and let's go back to February. Let's go back to February because I think that's easy to wrap our head around, which again was kind of a wacky time. Yeah, so even back in Feb, we were, mid-February, let's see. Yeah, 15, 16. I mean, again, that's, that was before the big spike in March. But yeah, we were sitting down here, not too far off where we just settled out at the lows of 16.10. Your low, I think, was 14 and change for February, for the month of Feb, yeah.
Right. And if you go even, if you go to what, 20... the year 2024, that entire melt up that we had, VIX was sitting at 11, 12, right? That entire melt.
Yeah.
So what I'm kind of, pointing to here is, again, it's all relative to like what you said, but we're not in a point where, the VIX is so low that it's just this going to be continuously, people that there's no risk. No one's thinking there's still risk, right? Mm-hmm. Like basically what I'm gathering from this, or the 9-day, or the VVIX that we have sitting up at closer to 100 and across the board, is we're not at a point where everyone's like, it's full risk off, even though we've had the melt up. The mechanical buying helped. There's a lot of people were chasing all the stuff that we've talked about. So, for me, this is why I kind of like what he's saying now. And I'm like, all right, there's some, if we can get it, the move, there will be some type of event that should be able to rip us lower. And that's what I want to catch a big piece of, right? And I'm positioned for it already, getting absolutely skull fucked on my August puts right now. But I'm sitting in that. I'm sitting in, the VIX call spread, that I have, because again, if we go up and vol goes up, it's a win-win for me across the board. And then if we do get some type of event after, the summer's over and I'm wrong on the timing, right? It's not August, maybe it's October, maybe it's November, who the fuck knows? We get this rip down lower, then I'll just kind of adjust from there. And if I'm wrong, I'm wrong. If they're all wrong, they're all wrong. At the end of the day, right, I could sit in this and pay for it, scalping the markets all day, right? That's kind of the way that I'm doing this right now, which again sounds really arrogant and cocky to anybody listening to this. But, that's what we've been doing, and it's working, right? It's working, playing these range-bound markets or these melt-up markets. So, that's the interesting part of all of this.
Bingo. And I mean, how many times today, I'd have to go sit and count them, but how many, 50-point moves did you get on NQ that you could just sit here and scalp even a handful of contracts? You can have a nice day here scalping around these index futures or playing the option side. A lot of guys like to play the option side, but I mean, I'm having fun. That's the other side. I'm having a lot of fun trading this market on an intraday basis, and then having my long-term positions sit around where it's like, these big moves are fun. Think back to the days where there was nothing going on and you couldn't scalp. You're sitting in swing trades for 3-4 days at a time.
Yeah. And I'm having fun too. And the last note I want to put to all of this, I forgot to add this part, is because we have had this melt up too. The other thing that is playing into all of this is the dealers now are short gamma on puts to the downside. So what that basically means is now that some of the clients are long enough in the market, even though because they've been chasing, right? Which is why you saw that skew to the upside where you had all the short calls out of the upside that dealers are in, because everybody was buying call options. Now they have to hedge. So you're starting to see, and we saw it with June OPEC, some of this relocation across the board where people are now starting to put back onto the left side their hedges. They're going to start adding puts, which is good again for what we want, because that makes dealers short that gamma, right? If the client is long the gamma, the dealers are short the gamma. So now if we get through those levels, that adds the accelerant. So you have like this entire recipe for the pressure cooker analogy that we talked about earlier. And that's kind of the reasons why. And now we just got to wait to see what happens. So, a lot to dissect, a lot to go there, but yeah, that's where I'm at with all of this. And that's what I'm looking at. I think you and I are on a very similar page, of kind of how we're looking at it, and we'll see what happens. Again, as traders, it is our job to trade the market that we're given. Speculation, this is all for fun, right? This is all fun and games. There's no real bias derived from it. I will position for it, obviously, as a trader, but I'm also willing to be wrong, right? And that's kind of the part of the game here, right? You don't want to put this on if you're like, no, I need to be correct. Okay, well then you're better off fucking scalping for 2-minute candles. So that way you're guaranteed instant gratification of long or wrong or correct.
Right. I am curious. Did you catch the interview? I think Bloomberg hosted it with Nassim Taleb, and McElligott. Was that good?
Yeah. Jay told me about it today. He basically, all the stuff that we just kind of talked about was really what he kind of talked about in the podcast for the most part. So, like I have cliff notes from it. They talked about corporate buybacks, which has been a relentless bid when they're buying back their stocks at all-time highs, right? That's an invisible bid. He said selling vol is the new bond, where bonds aren't risk-free. So people are selling volatility, which is, again, part of the pressure cooker analogy of everyone selling vol and not really expecting it, to kind of go anywhere, which is problematic for when it does rip. And then you have the spot up, vol up, melt up. He was talking about that. Dealers are short the calls still. They're getting squeezed. They're forced to buy into strength. Vol control funds making everything mechanical. So it's all the stuff that hasn't really changed. And then he made some notes about options are no longer the tail. They're the dog, which I figured you'd like that analogy.
Yeah.
So, Trump being the human VVIX was something else that was mentioned, which Jay always says. And
right.
But it's a good listen because it's again, that guy's way smarter than I'll ever fucking be. And I just like here to sit and with you and like shoot the shit about what he's saying and ways that we could play it and understanding it. But it's only 20 something minutes. They just don't go really in depth into, this type of stuff. That's why they send the note out. I mean, if anybody listening, if you ever read an Omura Charlie McElligott note, the fucker talks more in code than I've ever seen in my entire life, where I've trained a fucking AI, bot at this point to be able to, go rip through some of it and make it a little bit more digestible. But I will say, I will give myself some credit. I've gotten better at understanding everything that he says.
Yeah. You've got a pretty good, you got the reins pretty good on it, my dude. You definitely do.
I think so. I got to get better at explaining it and walking it through. Like this is my ADHD, right? Like I just get all over the place, and but again, this is why I wanted to do this with you. We just shoot the shit, and wherever it goes, it goes. Like this doesn't have to be as coherent, but I do want to get better at that part of being like, all right, let's concisely kind of break this down because it is relevant to anybody who's a trader. That what happens on the indexes directly affects what's going to go on your equities for the most part. Minus, we're going down today, Uber went up, right? But that was because of Tesla going down. So there's caveats to all of this, and there's rotation plays like the one day last week we saw Q's down 1%, right? We saw the SPX down like 0.5%, 0.75%, but then RSP, the equal weight, was up 1%, right? Full on rotation day. Yeah, you can see it that way.
They're buying IWM and some of the small cap names. Exactly. Got to rotate out of all these big guys were sitting at near highs for the most part.
Exactly. And that's normal, right? That's just the normal place. So that's something to always pay attention to. So for anybody that doesn't want, can't really see if there's rotation going on, I always say just look at the RSP and compare it to everything else. And usually that's a decent benchmark. And then you can go pull up a stock heat map and be like, oh, I see that they went to banks. I see that they went to health. I see that they went somewhere else. But to your point, that's why ARM started to come back, NVIDIA, all these different things. So anyways, we will get better as we do this, talking about these notes, and it is what it is. So that being said, Smid, do you have anything else on the docket that you wanted to talk about? What's going on in the markets or the economy, or
nothing too crazy. Something I am keeping my eye on, thanks to our buddy Kelvin over here, is just Google. Google relative underperformance compared to all the other Mag 7 guys. I think that obviously here is kind of a tough buy because it's at relative local highs, but still a long way off all-time highs. And if this continues, we're not getting away from the old Google machine. It's just not happening, I don't think. Maybe some of these chat GPTs, et cetera, take some of their revenue share, but I don't think so. I don't think Apple Intelligence and all that's going to really hinder these guys. So that's something I'm keeping an eye on. Again, I'm a little blown away by the move in some of these names. Oracle, another one where, they've just been on an absolute ripper since earnings, which is great. Bummed to miss that because I was in that pretty early on. But, you get some of that. And then, like I said, I think gold looks good. I think Bitcoin actually looks pretty good. It's, the crypto space is catching a lot of momentum these days with these ETF, I don't want to call them wrappers, but they're essentially wrappers, all right? They're using their stock to make an ETF or a treasury with Ethereum or Solana. And then the stocks are just going parabolic, right? It's fascinating. And I don't want to say it's good or bad for either the crypto space or these investors, but it's very interesting to me that, companies like Coinbase and Kraken have made it so easy to onboard. And yet the way people still want to get their exposure is buying a stock that's making a treasury of this other asset. It's mind-bending to me, right? And we've been in the space for so long that it's like, yeah, you want to go buy, Ding Dong coin? It's 3 clicks away. It's that easy. And yet it's almost easier to do 2 clicks and log into your broker and go buy Tom Lee's,
Dude,
whatever the name of that ticker is.
bro, don't even get me started with these treasury fucking pieces of shit. They're all trying to do MSTR. That's all this is. It's
Right.
let's create a SPAC. Let's be an Ethereum treasury. Let's do a Solana treasury. Let's do a Bitcoin treasury and piggyback.
Right.
Just, what are we doing?
Right. And then what was it? Is it Bit Digital? I think it was today. Yeah, Bit Digital sold, some 280 Bitcoin, raised 172 million, right? Or wait, that's a stock offering. No, they sold 280 Bitcoin and then turned around and bought Ethereum with it, which I think is the fun. That's it would be like a gold miner selling their gold bars and turning around and buying silver eagles. Very counterintuitive to
Silver Eagles.
I mean, it's just you wouldn't do it. The gold guy's never going to turn around and buy silver. It's just not, it's a different game. But it's fascinating to see how these folks are, they are playing this market and what they're building. I do not think Ethereum solves the problems that people thought it was going to. I think,
of course, not.
You and I are on the same page here. Let me know when I can put my car title and the house deed and, my ID on the blockchain, and I'll probably still not want to fucking do that. I'm going to trust that with the bank. So, but that's just me personally.
Right. Right.
But again, this is the market we're in. This is the new and, front running kind of cool stuff. And if you're clever enough to catch them, I talked to a guy last week who did catch the Tom Lee pump, and I'm sure that he made a pretty good chunk of money on that. What is that ticker? BMNR, correct?
Yeah, it's BM, whatever the fuck it is. It's piece of shit. That's what it is.
But yeah, this thing ran from $6 on June 27th to 160. I mean, it's absurd. It's absurd. But if you can catch it, I mean, Joe, that was why didn't I buy the million shares and I'd be fucking retired now?
Or of Oscar.
Yeah, dude, you're telling me, dude. You're telling me.
You had the Oscar call there for sure.
I did, and unfortunately, in the client account, I got that loaded up a little later than I would have liked. But again, I think the upside on this looks pretty good. We'll see what happens there. But yeah, other than that, man, just it seems like every day there's always a ticker that kind of blows my mind of like, oh, this is what they're going after today, huh? All right, I don't know that I can trade that, but again, I'll cheer for them from the sidelines. I'm always happy when people catch these things and make a walk off into the sunset with a loaf of bread under each arm. I'm happy for them.
Right. 100%.
So other than that,
100%.
Not much on my end.
All right. Well, that means that we can pivot to trade or fade. Our favorite game that we love so much. I'm trying to pull what I got here. Okay, so what I have from the last time. So when did we do this last? June 10th, right? And we did some short dated shit on June 10th.
Mm-hmm. Yeah, I think we just pulled from the board, correct? I think
we can't do Banana Man no more because he's hiding his stuff, and apparently he's turned 30K and 170K being a relentless bull, which means that he'll end up making all of his cash, and then when we have this next leg down, he's gonna be buying every fucking dip. He'll get his face ripped off from all the local negative gamma, and we can all laugh. So
when are we gonna pay for his subscription so we can just
honestly
the Banana Man?
I honestly am like debating just, writing it off. It's a nice company expense here.
Say, hey, dude, we play this game every other week. We kind of need to see what you're doing. What's the deal? We'll give you an honorable shout out every other week.
Yeah, Banana Man. What are you trading today, son? All right, so I have the spreadsheet finally made to keep track. So last time we spoke, we did... And I'll add this for those that are watching. We did NBIS. We had NBIS 58 calls. I traded it. You faded it. You would have won. I traded it because that fucking stock made me hella cash. So that was spectacular. But that was a loser for me. What's that?
Almost, it got close. I mean, 56. It's not too bad.
A little bit off. But it, we would have had to have hit it by June 13th. So this is June 13th.
Okay, right, yeah.
So we never even got remotely close. It caught another bid the other day, and then it came back down. Then we did Core Weave. We both traded the June 13th 140 puts. So it would have had to have touched 140, which is right here. It did not. Because we took this trade on the 10th, which had been right here. Mm-hmm. So it got close. We got to 142.23. So technically, given if we would have bought it, it would have worked, but that's not how we played the game. So those are both fat losers for me and the Smid Dog. I'm 0 for 2. And then we did PLTR June 20th calls, 135s, which I believe was a fat fucking winner.
Oh, yeah.
And we both traded it. So Smiddy went 2 for 1, which is nice. We'll add that to the beautiful leaderboard. And I went 1 for 2. It's funny. It's funny that you went 0 for 3 for like 3 straight weeks. And then, now that we start keeping official score, you're taking the lead. So Smitty is taking the official scoring lead against me, and we'll go from there. So
I probably just goochered it, but it is what it is.
This week, I get to pick the stocks that I picked off the board. So these are some of the highest traded premiums from our board today, and we'll see how they did. So we're gonna start with the first one here. First one. These are for July 15th, so the monthly expos. It is NVIDIA 160 calls, which is this is not a crazy one. Now, NVIDIA 160 is right here. So, it depends. Do you think we're going to press back to all-time highs, or do you think they're going to have another rotation day out of semis and tech?
I think I saw it over the weekend. I think it won, 164? It's a $4 trillion stock. Why not? I'm going to trade it.
Fuck it. He's trading it.
$4 trillion? Who cares? Who's counting anymore?
So he is going to trade the 160s. So that would mean
I want to see how expensive those are, just out of curiosity, what those actually cost over here. So that was the June 20s, you said, right?
Yeah.
Or
no, July's. The Julys.
Okay, July 18s. I was like, wait a sec. Dude, they're $297. I mean, on the ask side, that's at least closing. That's not bad. They're not, the premium's not crazy expensive. Vol's not jacked up on these. I mean, yeah, this could be, that could be a nice winner. Not financial advice. Don't follow me, but I would trade that.
Smitty's going to trade it. And we're only like 3 points away. Again, it just has to touch it. To touch it. I'm going to trade it too. Even though I don't think we've hit this catalyst, I think once he pushes, now that he's pushed the tariffs to August 1st, basically, I would trade it too. And again, disclaimer, this is just for fun. We're not actually buying or selling this shit. This is purely for entertainment. So that would mean both of us trade. Next, I will go first on this one, is July 11th. So this week expos, Tesla puts 280s. So we're talking about going and testing this. That's what we're talking about.
Sore spot today. Too soon, Joe. Too soon.
Yeah, that's why I brought him up, because you wanted to be, play this piece of shit. I am gonna fade this. I'm gonna fade it. And my reasoning more than anything else is they love to just buy all the fucking dips up on this piece of shit. Last big dump that we had, which was right here, June 27th, we dumped. To July 1st, they bought that shit right back up. And that's because since this is this week's expos, I am going to fade it. What are you going to do?
Yep. No, I'm with you on that one. And honestly, thesis here.
Stop following me, motherfucker. Holy shit.
I'm going to goocher you this week, Joe. I'm telling you. But no, God. So the reason I killed that trade today and didn't take it overnight, which again will be, we can all point and laugh at myself tomorrow when they gap this up 15 points. Which I'm sure they will. But I looked at that, the June 5th lows of 274. And I thought to myself, my average was 294 and a quarter, let's say. I didn't want to wake up tomorrow in the event that they don't buy it up down, another $20,000. I was like, yeah, no, I think I think, or sorry, that would have been 200,000 if I get a 20-point gap down tomorrow. So I went ahead and just stepped aside, but I don't think we get there. I think that's somebody thinking, Musk is going to fall out of the sky or who knows what. But I would say no dice on the 280s for this week.
Okay. So we are following each other on this one. Now, this is a kind of a pair trade now. So now we're going to go to the next one, which is Uber, which I am playing. Now, again, these are for mid-July. And it is 100 calls. So this is for the July Expo, 100 calls on Uber, which plays into the Tesla, thesis here. So you got to get up to here. Again, we're already all-time highs on this piece of crap. But yeah.
I'm going to go ahead and fade this just because I've been disappointed by Uber before trying to buy the strength on this thing. So if I were actually going to trade this, I would be fading the calls at 100. Or rather, if I was in the trade with some commons, I would sell those hundreds. And if I got called the shares, I'd be completely fine with it.
So, as someone that is in this trade, I'm not in the hundreds, though. I'm at the monies. They love to kill people. They love to kill people when it's too far out of the money on this Uber. So, despite being in it, I'm going to fade it as well. We're all the same this week. And my thesis is the same. I think they're going to end up buying Tesla back up. I think that you'll get another pop in Uber. That's what I'm playing for in mine. But that's why I'm at the monies. I think I'm in the 95s or I'm at the 96s today. So, I'm sitting on a little bit of green already.
Nice.
And I think you might get a pop up past this current high that I have set here around 97. Maybe you get to 98. And then I think that's all she wrote. So, I'm playing this for another day. If I'm wrong tomorrow and they gap this down, then I'm out and I'll eat my medicine. But I'm looking for just one more day of a move. And I'm hoping it doesn't have the same type of pair as it does with Tesla. Or, I'm willing to lose on this Tesla call that we said today and for my real money to work. So that's all that matters.
I like the little hedge there. I like your hedge, Joe.
I'm hedging. I'm either going to be right for the podcast or right with real cash. So let's
recap. It would have been more fun if I said I should have faded it because a Waymo almost T-boned me the other day.
There you go. That's how you know.
On like my home street.
My God.
I bend the corner and this thing was parked, puts its blinker on and just almost veers right into me. And I was like, what the fuck? I'm going to get T-boned. There's no actual corner here. Should have used that as my fade thesis. But other than that, man, I see those things all around town. There's a million of them here. That was the first time I've ever seen one almost do something silly. And I've been seeing the robo-taxis finally popping up. They're apparently the geofences my neighborhood. So I see them cruising by every once in a while. Nothing. I haven't seen any incidents. That's what's kind of nice is, I love to talk shit against Tesla and Elon and the silliness of it all. But so far, I haven't seen anything silly. I haven't seen accidents involving those yet. I think on Twitter, they were talking that there was one, but, I'm not diving too deep into that rabbit hole. So long as, everyday ding-dongs don't get injured, that's all we can hope for, right?
For sure. So to do a little recap to what me and Smid Dog got for Trader Fade, we have the 160 calls for July in NVIDIA. We are both trading. We have the 280 puts for end of this week in Tesla, July 11th. We are both fading, and we have the July monthlies again for Uber, 100 calls, which we're both fading. So we're following each other, which is never fun. But it's a competition. So, it is what it is. If I have to match them for this week, it is what it is. And, what you guys don't know is we're playing for a fictional Monopoly money of $10,000. So it's big cash out there and a pack of smokes. So, again, for him, it'll be a pack of smokes. For me, he can buy me my, this is a non-sponsor plug. Zippix nicotine toothpicks, my absolute favorite thing for those that like the nicotine without actually having to smoke and don't want to vape. Very calming.
You got to try the knickknacks, the nicotine mints.
They got knickknacks.
Knickknacks. Yep. They're pretty nice. They are pretty nice, you know. Kind of same concept, dude. I can't stand like putting a pouch in my mouth.
Yeah, I'm
Not
not
the
a Zyn person. I didn't
Mhm.
like it. But the toothpick, like, you know, it fits the ADHD mouth asphyxiation shit that, you know, we all have. And then, you know, they taste pretty good. It's only 2 milligrams, I think. So it's nice and small. It takes the edge off. I haven't become addicted to them. Like I went without like a month without having one, which was great. But, you know, on days when I need a little chill, like, you know, pop a little toothpick in. So shout out Zippix. Shout out my brother who, you know, is in the military who stopped chewing and used that. And
Oh, that's nice. Love to hear that.
yeah, stop the chew for the toothpick.
Very nice. Yeah,
Can't
dude.
beat it.
I haven't had a fucking smoke in a hot sec.
Damn, that's good,
One
dude.
of those. Dude, I go on and off. It's one of those. Like once I'm like, yeah, I'm done. I just kick it.
That's it.
I've got that nice. I'm lucky, I guess, in that way.
I love it. Love it. All right. Well, good place to cut it. We'll be back with, you know, more of this in a much regular time frame again. And we say that every time, then something always pops up. But I do want to get, you know, into these more regularly so we can continue like upping the value, and you know, that just takes more practice. And you know, we're thinking of even doing like shorter episodes, like if when shit happens, like if we get a crazy down day, emergency episode, right? Similar to Dave Portnoy's emergency press conference that he does, you know, hate him or love him, the guy is a marketing genius. So, you know, you can't knock him even if you hate who he is. And then, yeah, you know, we'll see what happens over the next couple weeks here before I head off on vacay, and we'll catch all y'all on the next one. Thanks for watching. Please like, subscribe, leave us 5 stars. We greatly appreciate it. And Smiddy, I will catch you later, brother.
Thanks. Thanks for listening, guys. Have a good one.